Restructuring, as you know, these were only the leftovers that were done at the beginning of the quarter, so they all ended in July, around 2,450 crores worth. Regarding the refinancing that we have done, there are about 6 accounts, about 3,900 crores. And regarding what exactly has resulted in the improvement in the asset quality, I think 2 things. One, of course, is that our slippages have been lower, and the second is that our recoveries have been better. So both ways I think we have benefited, and that is why the net numbers appear better.
And in terms of going forward, by 5 by 25, how many more can we expect on that one? And is there any SDR also in the pipeline?
SDRs, 2 of them we have invoked, so those 2 should mature during the quarter. Regarding 5 by 25, it will depend upon the completion of the project and establishment of the cash flows. So this is something that will continue to happen. I don't really have a pipeline number right now. But again, as I said, as and when the projects get completed and the cash flows get established, most of the promoters will want to do this refinancing, mainly because it not only helps them to match the outflows with the inflows, that is their requirements of repayments with the actual cash inflows, but also it helps them to reduce the cost, because once the construction risk is mitigated, the interest costs come down. So it's a win-win for them, and therefore they are going to take this up as and when projects get completed.
So have you now seen that most of the asset quality concerns are behind us? Would you say that we have already hit the bottom and only recovery is now what is in future?
I'll say that we are beginning to see the bottom. I won't say that we have hit the bottom, because even now, the slippages are quite substantial. But the good thing is that slippages are not chunky numbers. They are mainly the smaller people who are still getting stressed out and who are slipping. And again, this takes time. In any downturn, for the benefits for it to reach the last person in the chain, it always takes time, and therefore we are continuing to see stress in these areas. Over and above that, the economy also adds or takes away stress from various areas. For instance, today I will say that more than power I am worried about iron and steel. And iron and steel not because of anything, but because the commodity prices have really come down and we are seeing a lot of dumping. Though the government has tried and protected through the safeguard duty, but yet that amount may not really be sufficient. So also we are seeing stress in areas like aluminium, also the result of dumping in textiles, because we have a large number of textile exporters and they are facing massive competitive pressures. We are also seeing some stress on the construction sector, especially the EPC contractors, where bills have not got paid or they have been settled for municipal numbers. So these 3 or 4 sectors continue to display stress, and therefore to say that we have seen the bottom of it all, I think is being overly optimistic.
All right, talking about rest of the numbers, net interest income, that has also seen a substantial jump of over 35%. That was on account of what?
That was on account of expansion of the credit. Basically, as you've seen, our book has grown well. Last quarter we grew only by around 7%, a little less, and this quarter we have grown at almost 11%. So basically it is a function of the expansion of the book.
And where are you seeing most amount of growth now going forward coming in terms of pushing your profitability also?
See, growth will come from various sectors. I will not say that it will be only restricted to one sector. We are growing well in retail, in corporate, large corporate, and in the international banking. The places where we are not growing are MCG, SME, and Agri. In respect of SME, we have just started growing. We have shown about a 5% growth this quarter after several quarters of negative growth. So that is where we will begin to now gain pace, because the new products, the risk mitigated products, as well as the processes are now completely in place. People have learned how to do it, so we will expect them to gain traction. Similarly on agriculture, because there has been a lot of recoveries over there, we are not seeing growth, but going forward I think that number will also begin to show better results. The last but not least, the mid-corporates. The mid-corporates also, I think the consolidation phase is more or less over, maybe one more quarter over there, but thereafter we will definitely begin to see a much more traction in that segment as well.
20% kind of a rise you've seen in the large large corporate growth.
That's right.
Is that sustainable? And also, how are you seeing the credit offtake in that particular area?
See, credit offtake in that particular area will actually go up. You know, some amount of growth in the large corporate sector has been from refinancing of projects taken from elsewhere, entering into those corporates where we were not present at all. So some of that has come, the 20% growth has come from that. But going forward, yes, we do believe that the large corporates will give us better numbers, mainly because, as I said, in some sectors at least, we are seeing investment appetite coming back.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.